The recent failures of Silicon Valley, Silvergate, signature banks created a lot of confusion, a lot of acrimony across the financial sector. Perhaps not more so in the crypto sector. And this is a sector that's already been reeling from the failure of the cryptocurrency exchange FTX with Sam Bankman-Fried. What does all that mean, and what's next for the sector? Luckily for us, we already had Kathy Kraninger scheduled to come on the podcast to talk about her work on cryptocurrency regulation with Solidus Labs. But as the former director of the Consumer Financial Protection Bureau, she also happens to be a former bank regulator. So we're very excited to have Kathy with us today. Welcome, Kathy, and thank you for being with us.
Thank you so much for having me. It's fantastic to be with you, Doc.
I got a big question for you to start, because people ask me this all the time, and I hear it asked all the time. What the heck exactly is cryptocurrency?
That is a great place to start. And I think we've done a poor job as an industry in naming and explaining. But let me take a step back and explain why. This is really about the future of the internet and the future of financial infrastructure. And so as we think about all of the things that we can do today on the cell phone that we walk around with in our hand, and even calling it a phone is kind of a misnomer because it's a computer in our hands. All of the capabilities, all we care about is making that purchase on Amazon and the fact that it shows up at our house, or that we can text everybody and communicate through social media. But all of that behind the scenes, communicating, messaging, sending what are actually zeros and ones through those lines, and that comes out on the other side as a message to all of us. That's the part that is really what the ecosystem around blockchain and cryptocurrency is about. So cryptocurrency is cryptographically protected. That means we've got it's really a mathematical equation effort, and again, very technical around how do you secure these assets or these tokens. And currency, the people who originally thought up the blockchain technology and have been building it really thought this was the future of currency and the future of payments. I'll tell you, I don't know that I fully agree. I think it's really more accurate to say it's the future of the internet and then the future of this infrastructure, which is why so many of us remain skeptical and kind of confused about what it is. But what we're going to care about is, again, those builders of Amazon and Google and what we can do with the blockchain technology and the tokens that we end up trading, and our ability to show that we own something, that it has value, that we can exchange it, and we can prove all of that on these ledgers and in this infrastructure. So that's my brief explanation of trying to make this understandable.
Well, that's clearer than I've ever heard it before. But if it's something of value and it's something that people can own, is it also something that's insured?
It can be, yes. And that is actually part of the cryptographic part of it too. It's something that can be secured. Part of the kind of the race that's happening now is a lot of different projects and protocols that are being built are testing different types of technology to really secure this, this technology and be able to sustain it, be able to grow and expand it. And so from that sense, there's that dynamic. There is an insurance aspect. So there's actually, you think about, again, all of the things that get built on the internet with insurance products and lending products. And that's also something that's happening in this space. How can you make sure that it is protected because it is, it's online. So all of the cybersecurity concerns that we have in our everyday, lives in engaging with the internet, those exist in this space. And then you also then have desire for insurance, desire for consumer protection. What remedy do I have if my wallet is hacked, or if the protocol I'm working with is hacked? How do we think about and deal with those things? So there definitely is an insurance component to this too. And frankly, the last point I'd make is just how new this is. The technology is really only 11 years old, and you think about how long it takes to get these things into consumer products and things that people, can understand and interact with. It's still all really new.
Yeah. Well, as a bank regulator, I'll have you put your bank regulator hat on here. What exactly happened with Silicon Valley and Signature? I mean, walk us through what happened with these bank failures.
So they weren't all the same, but I will say, just from a macro standpoint, one of the biggest issues and particularly the Silicon Valley Bank, I'd say there are two issues I'd focus on, but the first is around interest rate risk. So essentially, the banks have to think about how, of course, they back their assets. And with the continuing increase in the interest rates that the Fed is doing, all of the meetings that they have where they're deciding what the interest rate is going to be, that has an impact on what assets banks have and what those assets are worth. So you look at treasury bonds are a big part of this. They back their assets with bonds. As they have long-term bonds that they've purchased with interest rates, those bonds are not worth what they were worth when they bought them. And so you have a challenge here. They didn't have the assets to back up the deposits that they had and that they were lending on.
They should have known that was going to happen.
Yeah. And so that's mismanagement. That's mismanagement in its simple sense. That's something that bankers need to think about, have always needed to think about. And so at some of these banks, they were relying on long-term bonds that, are not worth what they had been worth when they bought them. So that's a real issue, and a management issue, and an oversight issue by government regulators. What were they doing to point that out at the banks, because it's a known risk. The other side that I want to highlight, and I have highlighted, is this issue around, a lot of crypto companies banked at these banks, a lot of tech companies in Silicon Valley Bank, particularly at Silicon Valley Bank. Why is that? So the other dimension that bankers need to think about is the diversification of their risks and which sectors they actually are working with, and how they ensure that they are diversified. It's something we all think about in our own portfolios too. They had relationships with a lot of these entrepreneurs because they understood them, and they went very heavily into tech entrepreneurs. So there was a heavy concentration in their client base that were venture capitalists and that were tech companies. The question is, why aren't other banks banking those tech companies? Why don't tech companies feel comfortable going to other banks? In my mind, I think that's a real question also for us to be thinking about, because banks are pushed to be very, very, very risk averse. And what does that do for us as a country? Because this country's greatness is built on the ability of small businesses to get capital, for banks to actually have a role in helping lend those companies the assets they need to grow and have economic opportunity, all of us. So that's the other facet of this, is just the concentration of tech and the bank run, I guess, is the last point. Those venture capitalists talk to each other, and they talk to each other a lot on social media and Twitter. Once that bank run started, everyone was pulling out. And so that massive level of deposits that were there, uninsured deposits, which means over $250,000 by each of these companies, for a lot of reasons I can get into more too, but we can leave it at that for now. Those uninsured deposits, people were very concerned about, and that's why they ran on the bank. And you had a significant portion of uninsured deposits from tech companies.
Well, Bernie Sanders and some others have said it was the rollback of some of the DoddFrank regulations during the Trump administration that caused this. Is there any validity in what he's saying?
Definitely not. So
Yeah,
it's a good one to pull apart because there has been a lot of misinformation about that. So what happened in 2018 was actually an act of Congress. So it was not regulations that were rolling back the DoddFrank requirements just from an administrative standpoint. It was a bipartisan bill in Congress. There were a number of prominent Democrats who were involved in that. And it was recognizing, again, that some of the provisions just went too far. But actually, none of the changes that were instituted in that 2018 law actually would have been relevant in these particular circumstances.
yeah. Well, there's always the default position of it was Trump's fault.
Yes, that's convenient. In this case, there's no truth to it at all.
Yeah. Now, the administration, the current administration, announced that they're really helping the depositors, not the banks. They're not bailing out the banks with their proposals. Who is being bailed out, and what's the danger there?
So I mean, you and I both know this, having worked in government, and I worked on the budget side of government operations for a long time. So it's always appropriate to be skeptical of who ultimately pays. And as you look at the debt situation in this country, there's taxpayers are paying ultimately for many things, and many of the things that we need to build and get our country out of, frankly, as we think about the path ahead. But as a specific dynamic here, how deposit insurance works at the FDIC, and the fact that the decision was made to ensure all depositors and not just up to the $250,000, per depositor per institution. That decision does have an impact. And so what happens is that the FDIC, pays that out, deals with that in a lot of different ways as the banks are sold, their assets are sold, liquidated. As they go through that process, there will be some funds captured there. But at the end of the day, there's an assessment on banks that helps make sure that the deposit insurance is there for the next time that it is needed. So that assessment on banks, that's the issue that is being debated right now. There are some community banks saying, hey, we shouldn't have to be assessed for this. We weren't responsible for this. So that process often happens too, but the FDIC has a decision about what that assessment looks like. And then those institutions have to recover those funds somehow, or have to actually get those funds somehow to pay those assessments. So that's the way this works. And then, so it's not technically, yes, a taxpayer bailout, but the money always comes from somewhere.
Now, Bernie Marcus said that these banks are badly run because everybody is focused on diversity and all the woke issues, not concentrating on the one thing they should, which is shareholder return. Is he right?
I think that's probably a broad generalization, but I think there is validity to the need to say they need to be paying attention to their basic risk management, and certainly that should be the focus of these institutions and their mission. Their mission to, again, provide shareholder value, but to actually fulfill a lot of those lending opportunities that build economic opportunity for the country. That's why the deposit insurance system's even instituted. We're talking about private entities. Why is there insurance at all that the federal government actually is providing? And it really is to enable so many of the things that make this country great in terms of the ability to build a business and obtain capital. So that's the focus for banks. That's the purpose. Do I believe that, there are absolutely groups of people in this country who historically have been discriminated against and Do we need to think about that in policies? Certainly. But at the heart of the matter, it's, are these good investments? Are these, what type of analysis is happening? That's the important part at the heart of this, is the risk management approach.
Yeah, the problem that I see, banks or any of our corporate institutions start getting involved in social issues, they should have their own interior sense of morality and what's good and what's bad. If you have others dictating what is good and what is bad, that's a sliding scale, and that can just move all over the place. And you find yourself just jumping through hoop after hoop, as opposed to determining what your values and standards are, making those known, and showing the results in what you do. And that's what I told a large corporate entity this week. I said, you guys have been doing this, and these are your results, way before DEI and ESG became prominent. And that's what you should be talking about and building on that, because the other thing is an ever-moving target, and you'll be chasing your tail forever.
Yeah, that makes a lot of sense, Doc. You'll find agreement from me too. I also think so many things, we focus on the current crisis or the current topic du jour and forget about other things. And fundamentally, this is about a comprehensive, risk management approach focused on, the core mission, the core values. And I think many of us would benefit in the country from a little bit more long-term thinking and not just thinking about today or tomorrow.
Kathy, where does crypto go from here? How resilient is the crypto market in light of the collapse of Silicon Valley Bank?
So we really are. It's an exciting industry, and unfortunately not as much in the US, frankly, as it is overseas. So that's the part I would talk about. It has less to do with the failure of Silicon Valley Bank and the other banks in the US, and more to do with the regulatory environment that the industry finds itself facing in the US in particular. So there are a lot of countries across the globe that see the opportunity and excitement about the future of financial infrastructure and the future of the internet, as I've described the crypto industry. And that's in Europe, instituting actually an entirely new regulatory framework through a law called MiCA that they are passing, and they're going to work through regulations on. There are a lot of countries actually in the Middle East that are becoming places where crypto builders are building because they have regimes that are specifically providing clear regulation. And you contrast that with the US. In particular, some of the US regulators are saying, oh, we don't need to do anything different to accommodate this technology or to make clear rules. We're going to enforce what are traditional market structure requirements on them, tell them they need to register with the SEC, even if they can contend that they're not selling any securities, and they need to, basically just conform to the current regime. And frankly, a lot of US regulators are sending the signal they don't actually care whether the US is the future place for building, the future of financial infrastructure. Right. Which is pretty disappointing as an American. It's you think about our role as a country in building the internet and where that has gotten us, and it is really about a lot of growth opportunity and, frankly, many of the values that folks purport to care about.
Well, a lot of people are a little apprehensive, I think, right now about cryptocurrency. Thinking that it's spawning a huge unregulated financial system without investor protection. What would you say to calm their fears, or are they legitimate fears?
Yeah, look, wherever there's an opportunity to make money, there are people looking to engage in scams. And wherever there's new technology that not everyone's gotten the chance to interact with or experience, you have less sophisticated consumers, and that actually begs a regulatory regime. That begs clear rules that good actors can actually follow clearly. And unfortunately, again, with the nature of the world, the US decides not to lead there. US agencies are not protecting Americans because Americans can interact with all of these companies still based in other places in the world, in some cases not following any rules, and in some cases actually following, good rules. So it's a mixed bag there, but it means the US doesn't lead. The US doesn't actually provide its own protections for its own citizens and residents. And so that's, I think, the opportunity that's lost here. You're not protecting consumers, which means you're not actually putting anything in place, and yet consumers are still going to access these services.
Now, some people say cryptocurrency is democratizing financial markets. Decentralized finance as a way to move things from centralized to peer-to-peer transactions. And that this sort of takes power away from the government and Wall Street and puts it back in the hands of the people. Is that the wave of the future, you think?
I do think it's an exciting part about this ecosystem. If you take it out of finance and talk about art and creation, and intellectual property as an example of, again, what this can facilitate, people can put their creation out there as an NFT, and they can actually sell it and benefit from it without going to, big art houses or anything else. They can sell their music direct to the people, through these mechanisms. All of that creative endeavor and proof of ownership is pretty exciting. You put it in finance, and I can tell you for myself, I don't see that I'm going to be doing that myself, because frankly, it's the time, attention, energy, the protections that do come from having intermediaries in a system. But the option should be there. Definitely, in my opinion, the option should be there for people to interact the way they want to. And we also know we have left people behind with our financial system, the way it operates. And so the opportunity, again, for somebody to say, I want to make my own decisions, I want to make my own risk calculus, and I'm capable of doing that, I think they should have that option. So it really is about expanding opportunity, expanding access, and also having a place. There will be a place for intermediaries.
Well, it's a complicated topic, and DeFi or decentralized financing. Maybe we need to back up a little bit because DeFi runs on blockchain. Now, can you tell our listeners what exactly is blockchain? That's another one of those cryptocurrency questions. Everybody's heard of it.
Yes, but they're not quite sure they understand it. So I think it gets me back to the blockchain is really, think about it as a ledger, and it's a virtual ledger, if you will. It's technical. It's software code that's being built, and those cryptocurrencies or tokens, you might hear them get called, digital assets. That's what's actually helped building the blockchain. So those are the that's the mechanism to build the blockchain to the next chain. So every group of transactions, is trading tokens, is moving that value from one person to another, and the blockchain is the record of that movement and that ownership shift, if you will, or that transaction. So that's what the blockchain is. It's software. You also hear the term smart contract, which is also maybe not a great term, but it is, how do you embed all of the rules about the transactions into, again, this public ledger so everyone can see what the rules are. And it's done by software, but it's a pre-agreement. If I'm going to sell you my house and you're going to pay, hundreds of thousands of dollars for it, the software actually says, okay, here's the mechanism by which both sides offer their ownership, And the exchange doesn't happen until both sides have done what they said they were going to do. And you don't need anybody in the middle for that. The software just executes when both sides have actually provided, according to the rules of the software, what they promised to do. So it's a pretty powerful capability there, not needing that intermediary. But you also have intermediaries that could facilitate, that transaction, just like we have them today.
Now, where is it backed up? Traditional currency, you got Fort Knox, you got places that back things up. Where's any of this backed up? Or is it backed up?
Yes, and some of it definitely is. So one of the key things in the ecosystem for, again, helping to exchange value when some of these tokens are just new projects, and do they actually have any inherent value, or what is their value? Frankly, their value is what someone's willing to pay for them, which does cause some interesting challenges here. But we have companies that are issuing stable coins. It's also a word to be careful with if you hear about stable coins, but those that are truly stable are backed. And there are a number of them. A company called Circle actually issues USDC, so it's basically a dollar designated and backed stablecoin. They actually have one-to-one reserves. They are a regulated company by the state of New York and as a money service business in states across the country, and they're a global company. So they have the reserves and have proven that, and do regularly provide demonstration of that. So there are backings of things, and then some it's market driven. Again, how much will someone pay to actually buy that token? Gets you to, though, commonly people aren't going to understand this until they actually understand what types of things are being built on that token. What can you do with it?
Now, Kathy, can you tell me about Solidus Labs, where you work now? When did they come about, and what do you do there?
The company is 5 years old, and it is a U.S. company headquartered in New York, but we have operations across the globe. And what we do, it's really a software company. What we do is help those crypto companies that are engaging in trading. So you've got your platforms and big names like that, or broker dealers, market makers, regulators, anyone involved in the trading of cryptocurrencies, digital assets. We provide the software to help them make sure that there's no manipulation or fraud in their exchange, in their ecosystem, and broadly around the tokens that they are listing and putting up for trade. So that's it's a role that is, again, kind of part of the infrastructure in traditional finance. There are companies that do this in traditional finance, and we're part of helping to build crypto and build it in a safe way. So it's been a fascinating journey to help build this company and to be part of this ecosystem and building it and thinking about what rules should apply. What's the right behavior?
You do market surveillance. How do you surveil that? I mean, what does that mean?
No, it's a great question. So just like, the New York Stock Exchange or NASDAQ, they list all of these, equities, stocks, other or commodities exchanges, as you think about those things. It's watching the transactions, the buys and sells that are happening, watching the flow of funds as people are depositing funds or withdrawing funds or depositing or withdrawing assets onto the blockchain. We watch all of that data around those transactions and those trades and are looking for patterns of things that are, again, inappropriate or illegal. So you think about those who are using insider information. This is a classic thing that happens still in traditional markets after years and years of insider trading being illegal. You watch in advance of a listing. Did someone actually benefit in a way that indicates they might have known something in advance that they should not actually be benefiting from, a company that's going to go public, for example. Similar things in the crypto space. If a big exchange like Coinbase is going to list a token, those inside who know about that listing can't profit from it. They're not allowed to do that. And so we're the type of company that is monitoring the activity and saying, oh, someone may have benefited from this. Go investigate that. Let me point that out to you. And then it's investigated by the company and then maybe even reported to regulators and prosecuted. So that did in fact happen with a Coinbase employee now that's in the Department of Justice brought a case against him, and so did the SEC.
Are the current regulations sufficient, or if you had a magic wand, what else would you do?
The biggest thing with current regulations is getting some understanding that this technology presents different challenges. One of the things that is a big issue for the industry and hard to explain to common people, but we in the US have totally different regulatory requirements and different regulators for commodities and securities. So if it's a stock, or if we're talking about gold or coin or corn, there are different and the derivatives that come from that. There are different regimes there, and then different registration requirements for any exchange or broker dealer that wants to be providing products or selling products in those arenas. And so there is a huge question about what the cryptocurrencies are, what these tokens are, and so which regime applies. And it's very weedy, gets very detailed very fast, but that's a big question mark. So if you don't even know which agency to go to and which paperwork to fill out, and this is not a simple thing. This is millions of dollars of lawyers' time to fill out that paperwork and register. That is one of the big issues that needs to be addressed. It's also fundamentally to bring it back to real people, how we regulate technology in this space. And if I produce code, software, I put it out to the world, am I liable for how people use it? And right now, code is speech in the United States. So that's something that is being dealt with by Congress and being thought about, and is a big issue that affects all of us. But it's an issue for cryptocurrency too, because all of those builders in decentralized finance, are they building software? Is it technology? Or is it a financial instrument that they're trying to make money off of? And what's the difference? And how do we regulate those things? Where are the lines on that? So there is need for greater clarity in the U.S. around this regulation.
Well, how is the regulatory environment in the U.S. compared to other countries?
Other countries have really, like I mentioned Europe and Mika earlier, other countries have basically gotten past that issue by saying what we say today. Company, you get to decide what you're issuing, and we'll, but we're not just going to say commodity security. We're saying commodity security and any other crypto asset. You still have to follow basic requirements around disclosure. You still have to follow basic due diligence and good corporate due diligence. So there is a regime that other countries have put in place. And actually in the US, the state of New York has done that too. There's again a different licensing regime and an option that gets around this issue. At the federal level, there hasn't been a lot of openness to that, and that's something Congress needs to work on to really help provide that clarity and again make the U.S. a place where builders want to be.
Well, that time went by very quickly. I want to thank you for being with us and helping to clarify some of these issues. I think you've made it clearer than I've heard anybody make it in a very long time or ever. And just want to thank you for all your service to our country and for being a patriot. And best wishes for Solidus and all the things that you're doing. And we'll be surveilling.
That's fantastic. And thank you, Doc, for holding this forum. Great opportunity to catch up with you on important, but definitely complicated topics. So glad we could help provide a little common sense and a little bit of clarity to folks today, but definitely more to be talking about going forward.
Well, I enjoyed talking to Kathy about the future of cryptocurrency. It is a complex topic and something that people really should pay attention to because I think it's going to impact the whole currency market in our world going forward. So make sure you stay tuned to that. Also, I didn't mention it during the broadcast, but I first got to know Kathy when she was working with Mick Mulvaney at the Office of Management and Budget. And she was a wonderful person to work with, extremely understanding and intellectually quite superior. And now for your common sense prescription for the week. It's spring, finally. Time for a lot of people to clean house and get a fresh start. And, one of my favorite verses is in Psalms 51:10. Create in me a clean heart, O God, to renew a right spirit within me. This is time to renew. And one of the best ways to renew is to let things go that don't matter. Clean those out so you can get a fresh start. And particularly if you're holding a grudge against somebody, you can't forgive somebody for something, let it go. Because you're actually doing yourself a favor. You're sweeping that piece of garbage out of your life and allowing yourself to move forward like spring, new and fresh. And just like the new start God gives us every time we ask Him for it. So that's it for this week. Please subscribe for free on Apple Podcasts, Stitcher, Spotify, wherever you get your broadcasts. Make sure you never miss an episode. And if you enjoy the show, tell others about it, rate us and review us. And remember to treasure the cornerstones: faith, liberty, community, and life. See you next week.